Thanks for joining us once again. Today we take a look at a large number of domestic challenges being experienced by China, and now those challenges are starting to bleed into the Chinese prosperity that Tesla has enjoyed as a central part of the growth and success of the company. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy the show, would like more ideas on investing and trading, please join us on Patreon. We also wanted to note to you that we do have a couple of books we've recommended on numerous occasions. Those are Black Swan as one of the books that's listed below. We also wanted to note that we are encouraging you to consider reading Peter Lynch's book, One Up on Wall Street. There are actually two books that are the same book, slight changes, both of which we highly recommend you consider reading for general investing ideas, including sort of how to manage your investing in Tesla. So, as I shared, we're really going to take a look at some of the domestic challenges that China has been experiencing. And then we're going to follow up on that in terms of, well, how is all this affecting Tesla and how things are moving? And, I look forward to both presenting and getting your input on it. So the first thing I wanted to note is let's look at production. So this year is scheduled to be a million-year number of vehicles produced. Obviously, 80% of those will likely be Model Ys, but they're producing Model 3s at different tiers as well. So the problem that's going on right now is that, I don't know if it's a problem per se, but the fact is that China for a long time has been sort of a production hub. So if there was demand in China, Tesla didn't have to worry about it because those vehicles could be shipped to Europe, they could be shipped to Australia, or all along, I guess, the coast from China to Australia. And in particular, Australia is an awesome place to produce cars. In fact, I believe that there's an open question as to why Tesla has not made an effort to perhaps do an assembly facility in Australia that would allow them to ship parts there, slow down the taxes a little bit, but take advantage of the huge population of folks that are wrestling huge electric costs. Australia actually has the per capita highest number of solar panels in the world, I'm told, and therefore, when experiencing high costs for energy, those solar panels allow people to get off or cut their use of the grid, if not get off of it, possibly upgrade power produced extra to the grid, but most importantly, power their cars, and that's also a cost reduction that they're enjoying there. So I really believe that this is one of those marketplaces. It's a first world country, so therefore they have first world money, but they have a high incentive cost-wise to make the transition to electric in the form of Tesla, so all of the manufacturers are doing very well in the movement of their vehicles there. So let's get on to the China issues list. So for the last, let's say, month and a half, my listserv has been getting a huge number of hits from Google/Yahoo regarding presentations related to challenges being experienced by the Chinese marketplace. So as you know, Evergrande, along with several other real estate firms, have had some fairly ugly situations pop up when it comes to the collapse of their real estate market. I think that's an easy one to understand in terms of real estate collapsing. Some of how the Chinese real estate market works, I've been learning, and empty buildings, but people still buying them as a way to store for their retirement is pretty amazing. But as a result, we have ghost cities where people are happy to own real estate because it's one of the domestically approved methods. As you know, we've had a flood in Beijing, and I really think that's a very important place in the country because when you look at Shanghai, Shenzhen, Beijing, there are several of the leading cities that are driving, sort of the economic prosperity, even though you're finding it throughout the country. The next issue is there's a Belt and Road Initiative that calls for China to spend a lot of money to sort of build out an infrastructure for moving goods on land into Europe. And a lot of the loans made to companies along or countries along the way have turned out in default or in tough situations. So there's cash being consumed there. China has a $50 billion a year initiative to increase their China presence for access to raw materials. And so the exchange there has been infrastructure in the form of railroads, et cetera. But China has gotten a lot of jobs and spending on trains and other China-produced products that can go into all these places as these initiatives are being executed. So in general, it kind of might seem like spending, but I really think it's more investment by China in partner countries, and the goal obviously to increase their whole economic output. So there's a lot of cash going out. The problem has been, is the cash coming back? We've had some issues with COVID, et cetera, so that also has been a negative headwind to the Chinese economy. The next one I wanted to look at is recently I got a chance to watch a video. Sarpenza is the name of the site, and the latest was sort of focusing on Shanghai. Shanghai is one of the most important expat cities in China, but it's a huge city with large numbers of sort of touch points in terms of the demographics of citizenry for that city. It's also the place where Tesla is producing vehicles. Just a reminder, Elon had wanted to put factories in different provinces of China in order to build better rapport between the company and those individual sections of the country, but Shanghai wasn't having it, and hence we just have a giant plant in Shanghai, and everything else is being shipped from there without allowing the jobs from the Tesla facility to flow in locally. And I really think that this phenomenon actually affects what's going on now, which is we're having heavier competition from other areas, particularly BYD in the south, relative to how many vehicles or electric vehicles in Tesla's sort of price space that are being put out. Now, as you know, one of the things that triggered the latest downturn for Tesla has been a discussion of the fact that Elon is taking price leadership and is being followed in that price leadership by competitors, in this case in China, but also in the US when he's chosen to go that route. I think the latest price cut is a little bit on the creative side because it's for the Model X and S, which is a very small count of production, but sort of shifting the size of the battery allows them to sort of discount the vehicle, but also cut costs as well relative to those discounted vehicles. The next sort of more troubling thing that seems to be going on right now for China is what's happening with Apple 8L. So as you know, Apple has gone through a mode where they're now sort of shifting some of their manufacturing into Vietnam and India. And this move has resulted in a lot of factory workers that would have been working for Apple within China no longer have those jobs. And the Chinese government is then left to try to fill that gap. So Apple still has a presence, and they definitely need that presence because they actually go selling fairly well in the country. But right now, the pullouts by a large number of expatriates as well as their companies from China is impacting the overall sales for the company. So my read of problems for China has been when you have $1 trillion deposited on account, it gives you a lot of options. Exactly like what's happening with Putin in Russia. yes, there are challenges that the country is experiencing, but it's nice to have the flexibility of your own currency, large amounts of U.S. government securities that are sitting on the shelf that sort of back up the balance sheet of China. So overall, you know, yes, there are many issues. We talked about the flood, for example. You know, there are definitely issues that the country is sort of working to push through. The question mark or challenge, though, next is sort of what happens for Tesla going forward in that space. And I think that we end up in sort of a challenging work environment. A lot of vehicles being produced, more export of the vehicles than keeping in country to sort of get the numbers right, along with some discounting is what I'm expecting. But I don't think it's a necessary catastrophe. What I do think, though, is that we're in a sort of changed situation relative to the Cybertruck. What do I mean by that? Well, the fact of the matter is that the Cybertruck was supposed to be the icing on the top of all of the other work that Tesla is doing so that we could get back into a growth mode, leveraging what the Cybertruck was doing. The problem now, though, is that instead of it being the icing on top of the cake, it now ends up having to become part of the cake because, you know, we're having sort of somewhat of a saturation of the number of vehicles being produced against sold. And so I do believe we stabilize on Tesla's stock, et cetera, but I definitely think a sub 200 price target is not out of line. And it seems that, you know, every time Elon decides to delay the Cybertruck, we sort of end up in a mode where there's wonderment of, well, will it actually ever come out? Because it seems to get pushed back all the time, and there's no demonstrated number being, you know, produced plan. Nobody has actually driven it to see if it's that's not internal company that's driven it to make sure everything is solid, so we can rely on those numbers of consumers that pick them up being a happy client. So overall, my argument is that yes, stock is down, driven by the price cut we've seen. We've seen the price cut impact stock previously, but I do think that the lurking Cybertruck really helps us to stabilize and start a slow climb again, but not the sort of severe climb one would have expected had we not had this price change that's reflective of what's going on right now with sales primarily in China, but somewhat in the US as well. And I wouldn't put it past consumers to actually say, hey, if I think my Cybertruck's coming in pretty soon, why buy another vehicle in the fleet? Because that's specifically what I wanted. So I hope this is not the case, but it wouldn't be out of line for that to be part of the story that's going on. So we really look forward to your comments on what's going on with Tesla right now. I really think a September delivery of the Cybertruck and in good shape will make a huge difference in terms of everything that's going on. But it always seems that Tesla/Elon goes into a mode where it's almost though the news in between earnings announcements has become bigger in driving the stock price than the usual just rely on the end or the beginning of quarter to drive what is going on. So we definitely will see what's going on here and look forward to sharing what our analysis is with you. At any rate, next I want to move to our health tips once again. Just a reminder, 25 leg lifts a day to make sure you strengthen quad muscles. Also wanted to encourage you to consider a 20-minute walk once a day. Mental health and physical health targeting is a process here. At least once or twice a week of light weightlifting is also a great move. And so if you want to see more of our list of ideas to consider health-wise, I reference you down below. We do have a list there. At any rate, thanks once again for joining us. This is Greg for Teslafaninsight. Au revoir, tschüss, lehitaro, choda hafez, strazice, ni hao ma, arrivederci, namaste. And in Jamaica, we say enough respect, walk good man. Thanks for joining us. Have a great day, and bye for now.